Hey guys, this is Wendy, and this is part 2 of a 3-part series that I'm doing for you on banking basics for your private practice. And if you missed it, last week I talked about the 4 key accounts you need to have set up on the business side of your finances. Today, I want to talk to you about how to prepare for quarterly taxes. Did you even know you had to pay quarterly taxes? I didn't. When I started my practice, no one told me about that. I had no idea. I never even heard of that until I sat down with my tax guy at tax time and he said, "So, how much did you pay into your quarterly taxes last year?" And I said, "What quarterly taxes? What you talking about?" But indeed, when you are self-employed, when you're the CEO of your own show, one of the things you're going to have to do is pay into the federal tax system all year long. The only reason you didn't know this before is because your employer has been doing that for you, but now you have to do it. So what that means is 4 times a year, you have to pay an estimate of about what you think you're going to be paying in taxes at the end of the year. A portion of that. Those dates are, the first one is April the 15th, which you're used to. April the 15th, you pay your first quarter taxes. June the 15th, September the 15th, and then the last one is actually January the 15th of the next year. So the time that I'm filming this, we're in the middle of 2021. At this point, you should have already paid your quarterly taxes for April 15th, June the 15th, and soon, September the 15th is right around the corner. The last one for this year will be January 15th. And then next year, when you're doing your federal taxes in April, you will have to look back and see what did you pay across those 4 dates and add that number together, and you'll be reporting that. Now, how much you pay will vary from person to person, but essentially what the federal government wants you to do, and y'all, of course, this is obviously in the U.S., if you're overseas or in another country, I don't know what you have to do. I know what we have to do here. But here in the U.S., essentially what they want you to do is pay a little bit at each of those 4 quarters, enough so that it adds up to the total that you paid last year. You have to at least match that. If you're having a really good year and your income is up, as I hope it is, you might want to bump it up a little bit. If it's been kind of a rough year and your expenses are high and your income is down, you might can get away with a little less. But principally, you're supposed to match what you did last year. So to make this simple, let's say you paid $10,000 in taxes last year. That means this year you'll need to pay $2,500 in April, June, September, and next January, so that you match that $10,000 for the year. Then now, at the end of the year, when you do your taxes, you may find that this year you actually owe $12,000 or $15,000, in which case you'll have to pay a little bit more. Or you may find that this year, your numbers are a little bit different and you actually only owe $8,000 this year. You'll get $2,000 back. What I want to suggest to you is how to prepare for this, because I didn't know that to do this, in the first few years, I was never ready for it. And I used to lose a lot of sleep when those quarterly times were coming around. I would just go to sleep at night and honestly pray for a nice big Blue Cross check because I didn't have the money. And oh my gosh, where was I going to come up with a couple of $1,000 all at once? So what I learned to do, y'all, if you watched my video last week, I talked about one of the accounts that I recommend that you have is a business savings account that you specifically use to park money for taxes. I developed so much more peace of mind once I started doing that. And there's 2 ways you can use that. One way is every time anybody pays you anything at all, just take a certain amount off the top, a percentage, and park it in that account. I did that for many years. When I was feeling really good and money was flowing really good, I would put 20%, maybe 25% aside in that account. During the tougher years when things were a little tight, I put maybe 15% aside. But I always did something. And you'll be surprised how it accumulates doing it that way. And you don't even miss it. You just take it off the top, right off the beginning. You never even notice that it was there. So then when tax time comes around, you're good to go. Whew, easy peasy. Today, I don't really do it that way anymore, just because that was a little bit more complicated. Today, I almost always know about how much I need to be putting in there. So I just put a flat amount every month in there until I have that amount saved for the next tax period. Once I've got it, I don't worry about it anymore. That's what I do today. So you could put a flat amount aside each month, or you could put a percentage aside from every dollar you make. Either way, park it in that tax savings account, and you will be in like Flint, and taxes will not stress you out like they do for so many people. And y'all remember, when you have a lot of taxes to pay, that means business is good. It could mean you're not counting off enough expenses, I guess. We should probably talk about that too. But anyway, there you go. Now take all of this, y'all. Remember, I'm not a bookkeeper. I'm not a CPA. By all means, run this by your own finance professional and get some advice of your own. Always do that. Always listen to your gut and listen to the advisors that you trust. But that's my 2 cents for today, and I hope it helps you. Now talk to me in the comments below. Have you already been doing this? Do you have your own system for doing this? Talk to me about how do you prepare for your quarterly taxes. I'd love to hear. And if you like this video and this is helpful for you, please give it a thumbs up, share it with a friend, and even better yet, subscribe to the channel. I would love that. Have a great week, everybody. I'll look for you in the comments below, and I'll talk to you next week. Bye now.